Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, June 9th, 2009. We start today's broadcast with some data out of the UK, where the RICS house price balance improved to negative 44.1%, the best result since November of 2007. That means that the net balance of surveyors reporting falling rather than rising prices narrowed yet again in May. The data points to a stabilization of housing prices. A second report put out by the government showed that the average UK house price fell by 13% in the year to April 2009, compared with a fall of 13.6% the previous month. Between March and April, there was a rise of 1.1% in housing prices. A third release from the UK, the BRC Retail Sales Monitor, showed sales down 0.8% on the year in May. The warm weather and a bank holiday provided good performance for some goods. This May's data was always going to be difficult because the comparison is with strong May sales last year, which delivered some of 2008's best growth figures. The pound-dollar pair extended yesterday's rally following its bounce off support at the 1.58 level. From today's low near 1.5985, the pair rose 350 pips to reclaim the 1.63 level. The pound managed to shrug off the political turmoil in Britain as Gordon Brown appeared likely to survive as leader of his party. Also, the housing data helped as it showed further signs of stability in the British housing market. There was also substantial weakness in the Greenback today as the pound's gains against other rivals were much more subdued. In the Eurozone, German industrial production slid 1.9% in April, a worse reading than expected, and which dropped the annual rate to negative 21.6%. The decline was led by weaker output of capital goods, though the ministry did say that the chances of production bottoming out have improved due to stability in demand. The German trade balance on a seasonally adjusted basis came in lower than expected as it increased to 9 billion euros. Exports were down 4.8%, a figure that disappointed forecasts, and will keep the export-driven economy mired in recession. Imports, meanwhile, were down 5.8%. The euro-dollar, similar to the pound pair earlier, rallied in today's trading, climbing 200 pips to set an intraday high near the 1.41 level. The 1.41 level acted as support last week prior to the burst of dollar strength following the U.S. non-farm payroll data, though now it may seem more that the end of last week and the beginning of this week were more a correction to a dollar that was oversold. We'll see tomorrow how price will behave at the old support level, which now may potentially turn into resistance. The dollar-yen pair, after climbing to 98.90 and stalling in a tight range yesterday, fell in today's trading as the greenback was pressured overall. The pair broke down through the recent upward sloping line of support set up last week. U.S. stocks pulled into the green in late trading, though the Dow Jones Index ended the day right where it started. The US dollar-Canadian dollar pair broke through its support as well, which had set up as an upward sloping channel the past 5 sessions. After rising to 1.12 to start today's session, the pair slid to 1.10, a 200 pip drop. Oil prices rose above $70 a barrel in today's trading, the first time it has done so this year. Part of the reason for the rise in oil was weakness in the dollar, as oil is denominated in greenbacks, and when the dollar falls, it raises the price of the dollar-denominated commodities. Tonight, Japan is set to release its corporate goods price index and a measure of machinery orders. Australia, meanwhile, will reveal data on consumer confidence and home loans. Overnight, the UK will post its manufacturing and industrial production figures, and Germany reveals its revised version of May's Consumer Price Index. Tomorrow, both Canada and the US will release their trade balance figures, while Canada will also post its new housing price index, and the US reveals its Fed Beige Book. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.